All right, now we're recording. Okay, so I just went to the syllabus, and remember you can go to the bottom of your syllabus, and it's a long thing, and you get all the way past all these many words, and you can look at your course summary by date. So on January 6th by midnight, I want you to have your course pack, and you're going to upload a picture of it with you holding it. That's all you got to do. So I want to make sure you guys all have course packs by Thursday night, midnight. Okay. By Friday, you've got the syllabus quiz, and you're going to introduce yourself on Padlet. And then Sunday night, Cornelian window washing is due. You're going to upload that. And then Monday, we'll do an in-class audit. And then next Friday will be the Chapter 8 homework. Okay. Another way to look at your assignments is to go to home, or you can go directly to units and modules and look under getting started. And it shows all the things we have to do to get going on the course. Cornelian, syllabus quiz, introduce yourself, print your course pack, and so forth. Register for Wiley Plus and watch videos, okay? Then you'd move back and go to Chapter 8. And for those of you who had me for Accounting 201, this should look very familiar to you. So, and it'll say Unit 1 is Chapters 8 and 9, then we'll have a test. And then these are the tasks, the assignments, and these are the videos. Okay, all right. And we're gonna delay picking our companies right away because I'm still picking them at the end of the quarter, last quarter. You guys gave me possible companies to use. So I'm taking a look at those companies that were interesting to you to make sure they work with the assignment that I have. Okay, all right. So let's go to Chapter 8, course pack, okay? So you can either did that. I emailed you guys the syllabus, and it's a printout of what we just saw online, okay? But at the end here, there's some other things. Here's the big long syllabus, how I grade. We did these problems on Monday, some practice problems. And then there's a list of accounts that you can have to study on. This is how you get into Wiley Plus. And then here, I gave you the first pages of the Chapter 8 course pack. So you should have that there. And then just like 4 pages here. It's not all the course pack, but it's some of it. And then here is your calendar just for January. Okay, so you can get to these questions here on the syllabus, or if you've already printed out your course pack, let's go to that. Syllabus. Okay, maybe it's gone. Here it is. Okay, if you've already printed out your course pack, you'll go over to page 12 on your course pack, and you'll see this here as well. Okay, so I want you to get to that page. And I want to do some work on there. So hang on, we're gonna, let's see. Okay, I've now lost the form that I wanted. So hang on, guys. Stop sharing. Let me find it here. I want to pull that up. Hold on just a sec. So while I'm looking for that document, I want you to look at the course pack and look at those questions at the beginning of Chapter 8. Here we go. Ah, got it. All right. Start share. Here we go. All right. So here we go. Chapter 8 course pack. So I want you to look at this first paragraph. Have you ever loaned anybody any money? How much did you loan? And you can be as honest as you like here, because you can, and I just in the chat, maybe put something in there to answer these questions. And Julie, you're asking, just to be sure, do we have to print out 134 pages of the course pack? Yes, you do. And what you're gonna You can either do it at home or I really recommend you take a USB to FedEx and just have them print it out. It'll be like $20.
Can I print it on campus?
Yes, I think you can. The library, where do you print? In the because you guys get an allowance of so many prints per quarter. I don't know for sure the answer to that, but I think in the C building there's printers. I'm just not 100% sure.
I feel like that would be much cheaper.
What you might need those, yeah, that might be for sure. It should be about $20. So, but if you use your allotment, it would be free-ish because you already paid for it, right?
Yeah, last quarter I printed it at the library and it's free. You have enough credits per quarter to be able to print, I think, like 3 to 4 course pack worth of things if you do it in black and white and double-sided.
Like 500 pages. Yeah. Okay.
Yeah.
The library is open, so you guys can print it there. So print it out, take a picture of yourself holding it, put it in a binder so you don't have papers flying everywhere because it's a lot of pages. Okay, thanks, Safan. Okay. So in the chat, answer some questions. Ever loaned anybody money? How much? Did they pay you back? And do them all in one chat. So just like say yes, $500, no, do it all in one chat. I want to know what your answers are to the first question. So take about 3 minutes and answer those questions in the chat. And then we're going to do some journal entries. Oh, nice. That's glad they paid you back. Did you charge them interest, Cole?
No.
Should you have?
It was my mom.
Oh,
so.
No, you can't charge your mom interest.
Yeah.
That's cold. Yeah. So that would be cold. I don't like loaning money to people. Me neither. It's horrible. Sometimes it's better just to give them money. They ask for a loan and then you say, just take it and don't ask me for any more. So I agree with that. $20 and it was paid back with no interest. All right. Thank you. I loaned money to my sister for a prom dress. Yes. Oh, yes. You guys are generous. Okay. I got back no interest. Paid back. Good, good, good. They did not. I can't take. Yeah. A lot of people around the world don't do interest. So I think teaching you guys interest is not necessarily a universal concept at all. Didn't have to ask them more than once. Wait a minute, hold on, Afan. Didn't have to ask them more than once. What does that mean, more than once? You reminded them once?
Well, the one time that I mentioned that, yeah.
So like you loaned me 3,500. I didn't pay you back. And then you said, hey, don't forget to pay me back. You had to do
No, not like that. Like just like I just meant like the one time.
Okay, so you didn't have to
yeah.
remind them. They did it anyway.
No, I didn't have to remind them.
I'm glad to hear that. Paid back in no interest. Yeah, my mom needed cash. She paid me back. She took too long, so I added interest. All right. Okay. These are great. 3,000. Yeah. Yeah. It seems like you don't usually think of students as having a lot of money to loan out. But I have found when I ask this question over the years that maybe you don't have a lot of money, but you're pretty generous. So that's kind of cool. So companies are going to have to deal with accounts receivable, and accounts receivable is like accounts receivable is, that's funny, Micah. Accounts receivable is like a loan that we give people, our customers. We trust them enough to say, I will loan you money. I will let you have money. You can have this product, or I will wash your windows. And because I trust you enough to pay your bill in the future. Okay. And you probably know people that you would not loan money to because they're unreliable. Has anybody had somebody who, oh, I don't have enough money for lunch. Can you cover me for lunch? And then they never remember to pay you back. Has anybody had that experience besides me? lots of yeses. Okay, some yeses, yeah. What do you do in that case? If it's a friend, you kind of hate to ask friends to pay you back, but it does kind of make you feel like, why didn't they pay me back, you know? So it's an interesting dynamic when we loan money to friends. And if it's small, I'll just let it go. Yeah, just let it go, you know, just think of it as a gift. So I think sometimes that puts things in the right perspective. If they don't have the money in the moment, just say, consider it a gift. Don't ask me again. Let's not go to lunch anymore. Let's bring our own lunch. Okay. So, all right. So I want to talk about, I want to start chapter 8. And oh wait, hold on. Oh, there you go. New share. Can you guys see chapter 8? Yes?
Mm-hmm.
Okay, awesome. Thank you. All right. So this is all about, it's actually about receivables. I name it accounts receivables, but I think technically we're going to be accurate with what the textbook says. It says receivables. So that very briefly at the beginning of the chapter, we say there are three types of receivables. We talk about them briefly, and then we go into the rest of the chapter, which is all about accounts receivable. Okay. Okay. So make sure. Okay, I'm still recording. Yay. Okay. So types of receivables and accounting for receivables. Okay, so I already said this, turn to page 12 in your course pack, or if you have the syllabus, you can turn to those pages, but you will need the rest of chapter 8 handouts. I just gave you the first one, so be sure to get that done by Thursday night. So 3 types of receivables that we have, and again, accounts receivable is going to be the one we work with the most, and we're going to understand how to account for it, and then something called how to value it. All right. Notes receivable are different from accounts receivable in the same way that notes payable are different from accounts receivable. Okay. So the way the notes work is you will have, if I can put this up here, I don't know why it's not doing my voice up there, but I get focused on Alexa. Okay. Could do it like that. Okay. So notes receivable it's for a single amount, a very specific amount. Accounts receivable is like a ongoing account. Customer orders from you, you ship the company ships the product, they bill the company. They do it again and again and again. So think of a restaurant industry where you put in a weekly order or a daily order. You have an account with the supplier. Maybe it's Frank's Produce or FSA, Food Services of America, and you're just constantly ordering and paying your bills. Notes receivable is different. You're doing a very specific amount one time with interest, and you sign a formal note. Okay. There are other types of receivables. There are loans that you make to employees. And so when I was in industry, we would actually loan money to employees. If I can get this to stick on me now. No, it still wants to go to Alexa. Sorry, Alexa. We actually made loans to our employees. When I worked at PACCAR in Bellevue, which owns Kenworth and Peterbilt trucks, which produces Kenworth and Peterbilt trucks, back in the early 90s, I know this is hard to believe, but a lot of people didn't own computers. And so PACCAR wanted people to get computers. They wanted them to get them. And so they said, we'll loan you $2,000 or $3,000 to get your own personal computer. And then the employees would have a payroll deduction to pay that loan back. Okay. And you see loans to employees who are in sales, because sales is often very driven by commissions. And so that first 2 months, an employee doesn't have their commissions yet. And so you loan them money for the first 2 months. All right. So let's go on. Let's look at your course pack and let's do a few practice problems. So I want to journal entries, accounts receivable. Take this off. Journal entries, accounts receivable for the company Jiantong. So on November 6th, this is straight out of your course pack. On November 6th, Jiantong Company sold $1,400 worth of cell phones to Radio Shack, which is now no more, by the way. Okay, so start that out. Oh, I got the dollar amounts there. So what's the debit? What's the credit? Anybody call it out? You just did these. So what's the debit and what's the credit? Or you can put it in the chat if you prefer.
Is it inventory and accounts receivable?
Oh, you're on the right track. So let's do it as let's do the sales side first. So it's accounts receivable, and what's the other side to that? Because this is at the selling price.
Service revenue,
Service revenue?
is that correct?
It is
Sales
not.
revenue? Sales revenue?
Because it's cell phones. So it's going to be sales. Okay, so accounts receivable and sales. Now, from chapter 5, you should know that when we use sales, we also have to track the inventory, right? So we know that we have to know the other half of this. And I did not give you cost information. So what are you going to do here? You have to get more information, which you can see here. And I believe, did I give you this? I believe on your course pack, I gave you the gross margin percent. Okay. So take a look at that. I better turn to this so I'm following with you.
Which page are we on?
We were on page 12 in the course pack. So if you are, do you have your course pack, Zamzam?
Yes, I do.
Okay, so turn to page 12.
Okay, I see. Thank you.
You bet. Anybody else? Everybody on the page? All right, so we did first journal entry. We said we sold $1,400. Hold this up. We sold $1,400 and of cell phones. And the first 2 lines of that journal entry are debit accounts receivable and credit sales. And now I'm saying, now we've got to track that inventory. So what's the second half of this journal entry? What do we debit? What do we credit when we have inventory that we sell?
We debit cost of goods sold and then credit inventory.
Good, perfect. And then what's the dollar amount, Julie? What do we do for that? So how do we figure out the cost of goods sold? So what is this clue telling us? What do we do with this? So if we know gross margin is 28% and we know selling price is 1,400, gross margin is equal to sales minus cost of goods sold is gross margin. So if we know gross margin's 28%, how much is cost of goods sold?
So 0.28 times 1,400 is 392.
Mhm.
And then subtract that from 1,400 is 1,008.
Let's see if you're right. Yay. Okay. Cost debit, cost of goods sold, credit inventory. Okay. So that's just a little review. So that's your first journal entry on page 12. Okay. So let's log that in. And again, I don't collect these. These are just your notes as if we were in class and we were doing handouts that you were filling out. Okay. Anybody have a question as to how Cole got that? Everybody good on that? Okay. All right. So let's finish these transactions and then we'll move on to the more accounts receivable stuff that we've been doing. All right. All right. On November 9th, Radio Shack returned $200 worth of cell phones back to Jiantong. So this is going to be a sales return. So what is the journal entry for this? So take a minute. Okay, looks like electrical people are outside in the front yard, okay, but that's okay. I don't need to see them. Okay, what happens when a customer returns? How does the company recognize the return? What accounts do we use? So again, we got to reverse that sales transaction. And what's-
Inventory and accounts receivable.
That's going to be involved. So let's go back. Let's go back and look at these two journal entries. So first we reverse this one, but only for the, how much? Only for the $200. Okay. So do we use sales or do we use another account?
We use sales RNA.
Sales returns and analysis, sales returns and allowances, but we do use accounts receivable. Okay, so sales returns and allowances 200, and then we reverse the other entry here, debit inventory, credit cost of goods sold, because we're like Jiantong is taking the inventory back, so we're putting it back, and the 144 is going to be 72% of $200. Okay. All right. Okay, guys, I have to pause for just 1 second, if you guys can bear with me. So let's do the next one. See if I can find that. All right. So let's do the next one. I want you to work on the next one for 1 minute and say, assume December 6th, the company paid their bill. So work on that for 1 minute, and I'm going to answer my doorbell with this electrical people. Okay, I'll be right back. All right, so sorry. Sorry about that. Okay. What do you got? So the company pays their bills without a discount. What's it going to look like? How much does a company owe? How much does Radio
1200?
Shack owe? Say again.
1200?
Yeah. 1,200? Let's think about that. No. They do not owe 1,200. How much do they owe? So they return, remember they return some. So it's going to be, so the company's paying their bills. So when your customer pays, you're going to have cash and what?
Accounts receivable.
Yeah. So how much do they owe? The company bought 1,200, right? But they returned 200. Okay. So we're going to do.
Wait, didn't they buy 1,400?
Did they buy 1,400?
Yeah, I think they buy 1400.
Oh, you were
and then
right.
ret-
Sorry.
Yeah.
I lied. Okay. So they bought 1,400. You're right. They returned 200. Okay. New share. Let's fix that. Okay. I got it into my head wrong. Okay. So they paid accounts receivable without a discount. So they're going to owe 1,400 minus 200 is 1,200. And it's going to be debit cash, credit accounts receivable. Okay. If they took the 2% discount, it would be, they would get less money. They'd still credit accounts receivable 1,200, but they'd book the 2% to cash sales discount, and that reduces your sales. Okay, so they get less cash. All right.
I have a question on the previous journal entry.
Yeah, Zachary.
Is that a perpetual or a periodic?
Oh, good question. Anybody know the answer to this? Which one?
It's
All of them?
Perpetual.
It's perpetual.
How do you know it's perpetual?
Because we're using inventory, and so we're using inventory
Yeah,
with COGS. Yeah.
with COGS. So when you're
Yeah.
you book cost of goods sold every time you make a transaction with perpetual. You perpetually keep track of your balance in inventory and cost of goods sold. With periodic, you wouldn't book anything to do with inventory or cost of goods sold until you take inventory at the end of the period. Okay. Awesome. Okay. So I want to start this next section and just give you something to think about here. So on your course pack, it says valuing accounts receivable on page 13 must be reported at its net realizable value. What does NRV mean? Okay, so we're going to talk about valuation and then, all right. So from here on out in accounting, I mean, those of us that love, you know, everything ones and zeros, black and white, easy to understand, you follow the rule all the time. This is the side of accounting that's harder because it means that we, there's not always one exact rule for everything, okay? We'll try to make it as exact as possible, but there's just not all those rules.